Have you ever heard the phrase, money saved is money earned? It's a great idea, but in today's world, saving isn't enough. Why? Because of inflation. Inflation is the fall in the value of money over time. It also leads to a loss in the purchasing power of your money. So you need more money to buy the same items as before. This looks like the rising prices of your everyday buys. So if you want your savings to grow and actually beat inflation, you need to do more than just save. You need to invest. And today we're going to break down investing for you. In this video, we learn 5 things. What is investing in the stock market? How does it work? The benefits of investing, the risks involved in investing, and how to start investing. Let's dive right in. Investing in the stock market means buying securities that may increase in value with an aim to grow your wealth over the long term. You can invest in different types of securities in the Indian stock markets, such as shares of listed companies, exchange-traded funds or ETFs, which track indices, commodities, or sectors and are traded like stocks. Debt securities like corporate and government bonds, precious metals and commodities like gold, silver, crude oil, and more, currencies like the Indian rupee, US dollars, and others, real estate investments through real estate investment trusts or REITs, or in infrastructure investment projects through infrastructure investment trust or INVIT. When investing in shares of listed companies, you buy ownership in said company, and by holding them, you become a part owner of the business. As the company performs well, the value of its shares goes up and your investments follow. You can invest in a company in multiple ways. You can either apply for a company's IPO, buy its shares after it's been listed, or buy units of a mutual fund that invests in the company of your choice. Trading, on the other hand, is about frequent buying and selling of securities to profit from short-term price changes. Now that we know what investing is, let us understand how it works. Investing is a lot like online shopping. Let me explain. Imagine you're buying a shirt online. You search for the brand, pick the shirt, add it to your cart, and make the payment, right? Investing is pretty much the same thing. When investing in stocks, you pick a company whose stock you want to buy. Say you want to invest in Nestle. You go to a broker's app or platform, like Kite by Zerodha, and search for Nestle. Once you find it, you place a buy order and pay for it. That's it. You've successfully invested in Nestle stock and the shares get added to your Demat account. Now you can also track how your shares are performing and decide whether to hold them for the long term or sell them when the price goes up. Let's break this down with our Nestle example. Say when you invested in Nestle, the price of one share was 2,000 rupees and you bought 10 shares worth 20,000 rupees. Now let's say Nestle India announces great quarterly results and the stock price rises to 2,100 rupees. Since you own 10 shares, your total investment is now worth 21,000 rupees. That is a profit of 1,000 rupees. But this is a positive outcome. The opposite could also happen. If the stock price falls to 1,900 rupees, the value of your investment drops to 19,000 rupees and you lose 1,000 rupees. Investing requires patience. In the long term, the goal is for your portfolio to grow as the companies you invest in perform better. Now, why should you even bother with investing? Well, let's look at all the benefits of investing. Investing protects your money from inflation. Inflation reduces the value of your savings over time, and investing helps your money grow and keep up with inflation. Investing helps achieve financial goals. Whether it's buying a house, planning a wedding, or retiring early, investing can help you reach your goals faster. Tax benefits. Investments in securities like ELSS funds or the Public Provident Fund or PPF can give you tax benefits under Section 80C of the Income Tax Act. Investing contributes to economic growth. By investing in companies, you're indirectly funding their growth, which in turn drives the economy forward. Investing creates wealth over time. With compounding and time on your side, your investments can grow exponentially. These are the major benefits of investing. But of course, no investment is without risks. In the next part, let's understand the risks involved in investing. Market volatility. The price of the shares you invest in fluctuate daily. If the market moves against you, your portfolio's value could drop. Liquidity risk. Sometimes the shares in your portfolio might not have enough buyers, making it harder to sell them when you want to. This can usually happen with smaller or less popular companies. Company performance. If the company you've invested in doesn't perform well, its stock value might decline. Interest rate fluctuations. For bonds, changes in interest rates can directly impact their value. The key to managing these risks? Diversification. Investors can spread their investments across different sectors and securities to minimize the impact of any one loss. Now that we've understood what investing is and how it works, let's move on to the final part of the video. How can you actually start investing? Here's how you can get started. Open a trading and demat account. This is your first step. You can open these accounts with brokers like Zerodha. Just click on the link in the description and follow the simple on-screen instructions. Install the trading platform. For Zerodha, you can use Kite for stocks and Coin for mutual funds. Search for investment options. Use the app to search for stocks, mutual funds, ETFs, or bonds. Place your buy order. Decide how many units you want to buy and place the order. Track your portfolio. Keep an eye on how your investments are performing. You can sell or hold depending on your financial goals. And that's it. You're officially an investor. Investing is a powerful way to grow your money and protect it from inflation. If you're interested in learning more about investing, you can check out the Introduction to Stock Markets module on Varsity by Zerodha. The link is in the description. Thank you for watching, and we'll see you in the next one.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.